Hi, welcome to the Market Alert for Monday, the 24th of June 2019. So, global stocks rally fizzles on Friday on quad witching as Iran tensions spike. Gold hits a 6-year high. So, that's the news at the close of trade on Friday. And then there's a few other bits as well. Is interesting as well. Trying to prevent recessions leads to even worse recessions. A great article there. Bitcoin is actually above 11,000 over the weekend and not 10,000. And there was another one that I wanted to show you, and that's this one. Global negative yielding debt soars by 700 billion, get this, in one day, to record 13 trillion now of negative yielding debt. So everything's fine. You know, the economy's fine. There's nothing to worry about, all of the debt that's being created, and we can just get on with our lives. Wow. It's interesting again. You can see US manufacturing PMI plunges and existing home sales tumble. So this is in the US, and that says it all, really. It says it all. Right, so let's see what the market's reaction was for Friday. We'll start off with the Dow. You can see the markets in the pre-market session mainly sideways. Again, the 200 bar moving average becoming a bit of a magnet, as was the DP level. And then the market broke out to the upside. Let me just go back a bit first and show you after recording the market alert we had the obligatory rally, but it fizzled out a bit. As I've maintained in this market alert for a very long time, the all-time highs have to be taken out. The market will trade up to these and do whatever it can in order to do it. And we saw this in Friday's session, the market back above the 200 bar moving average, that same pattern, and the market rallying up. Now this price bar here is a very interesting price bar because time and again you will see either on the downside or on the upside where you get a sharp rally and then the market coming off the high, the volume high, and then prices making their way back to the downside. So here we've got an automatic trade with the market running up to this level, just short of the all-time high. If we go to the weekly chart, this is the best place to view this. You can see there 26,953, and Friday's high was there you got 26,911. So we're off by 42 points. Would make that the all-time high. So the market not quite doing this on Friday, and then we have a sell signal with the market moving to the downside. There's prices come back, but once again eventually breaking the 200 bar moving average, and then overnight we see prices bouncing and moving back to the 200 bar and DP level. Need to take this out, and no doubt that will happen as soon as the European markets open, and you will see the market go on in the pre-market session to hit the all-time high. Now, whether it holds above this level is going to be very interesting, because there isn't any news really to support the market above this. And this is where the implied volatility will come in. So we have 1269 for Friday. This should, I was just about to say, it should increase slightly because of the market selling off towards the close. So it's going to be interesting to see how the market reacts by trading up to the all-time high here. I think it's going to find it a struggle. It'll probably hit it, but then it's going to find it a bit of a struggle. You can see in the daily chart the market for Friday, and now turning around on the overnight market to attempt to move to the upside. Now we do have trade talks this week as well with Trump and Xi, so that's going to be the news that's going to move this market for sure. So any positive news of a trade deal is going to send the Dow to the upside. But after that meeting and the all-time high being achieved, what will there be left for the market apart from the potential of a rate cut next month, which is 3 weeks away? Meanwhile, in the pound, on Friday. You can see this moving higher, and no doubt due in part to getting down to the last two over in the UK, and also the dollar weakness as well. Let me just show you a dollar. So here you can see there's some weakness at the moment in the dollar index, and this is moving lower, which of course is allowing the pound to move higher. The weekly chart of the dollar index, a bit of a sideways move here, but closing back below the 200 bar moving average as well. So when you see all of this combined, and then you look at this, you can understand why all of the currencies are starting to move against the US dollar. Trump wants to keep the dollar strong, so again, he'll be out fighting to try and maintain this. So watch if prices make it to the 200 bar moving average in the pound for a potential sell. You can see there it went through, but then as soon as it got back, it then moved lower. And if we have a look at Bitcoin, there's been a big move over the weekend. We'll start with the daily chart. We sailed through the 10,000 on Friday. Saturday 11,000, and the high of yesterday, if we have a look at this, is 11,286. And again, just going back to Zero Hedge, Bitcoin is back as a safe haven. That's what they're saying. Certainly some momentum there, and the institutions aren't on board yet either. So the upside for this market is going to be very, very interesting. Pullbacks in the 4 hour seem to be the best options at the moment, as you'll see from this chart. As we pull back to the 200 bar moving average, you can see the winning trade after winning trade. So wait for a pullback in this to get back on the long side on this one. In the 15-minute chart for Friday, it's going to be compressed because of the big move that occurred in the early hours of Saturday morning. We can see that the market was moving up, a few shakeouts here, and you're going to see more of these in a moment. And then the market higher, a bit volatile over the weekend due to the lack of traders. And there you can see massive move on the early hours of Saturday morning there. $1,000 increase there, as you can see up here. And then on Sunday, let's do that. And then on Sunday, Saturday, the rest of Saturday, that was the early hours of Saturday morning. We had another buy to the upside. The market then showed some profit taking and indecision. And then the obligatory shakeout. Let's get rid of the week longs, those that have moved their stops up over the weekend, taken out. And then the early hours of Sunday morning, the market again moving higher and coming back and testing the 200 bar moving average before then eventually moving higher. But look what we've got here overnight. Again, the same thing, profit taking coming into the market. But now we're back above the 200 bar moving average. So if you're trading this, you want to see the market, the best way to trade this, I should say, is, as you will have seen, is let the market come back to the 200 bar moving average and then take the trade, because it's got a bit more momentum there. And the same on the downside, which is missing at the moment because of the momentum to the upside. But there will be a correction in this. You can see that we've moved very much to the upside since February here, breaking out, and this market will be due for a correction at some point, but it is a beast of its own, and who knows, it could just continue vertically, which it has done before. But certainly to minimize the risk, because of the level of volatility, is to wait for the markets to come back to the 200 bar moving average, close above, and then you've probably got a pretty good chance of getting trades to the upside. There is another technique that I'm working on at the moment, but I'll discuss that in a later video. Okay, what else have we got? Let's have a quick look at Deutsche Bank. This managing to move higher at the moment. Let's just get rid of this. As you can see, they're still sitting above the 200 bar moving average for this market at the moment. And Treasury yields moving back slightly during Friday there, moving to the upside. Okay, that will do it for this one. Let's see how the markets unfold today, but I suspect we'll have a run at the all-time high in the pre-market session because that's the safest time to do it. And what happens after there will depend on the trade deal with Xi and also 3 weeks' time when Powell is expected to reduce interest rates by 0.5%, but we'll wait and see if this is the case. But a lot can happen in between now and then. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.